Yo, what's going on, guys? Wanted to make this quick video for you guys and really break down inversion fair value gaps for you guys to understand. Yes, I've been talking about fair value gaps for a very long time, and a lot of you may understand that concept, and that's good. But I think what really helped me recently with my trading is understanding like, hey, if a fair value gap fails, there's still a way to get into the trade. And I did not take this trade, but I marked it up before everything had happened. And I was like, you know what, this looks like an excellent opportunity to just see if I'm in the right side. So I think one thing that's very important to look at is just look at market structure. One of my mentors a long time ago, he taught me this concept of being able to look at the markets in a zoomed out perspective, not too zoomed out. Like, honestly, guys, like 1 to 3 hours zoomed out like this is perfect. But one thing that you guys want to look for is these patterns in the market. There's V's and W's and M's and A's that will form. And when you see these V's and W's like down here, when you see these V's and W's like you do down here, that's signaling that we're most likely going to see price push up. One thing to look for too is when you see wicks pinning the downside like this, wicks to the bottom like this, wicks to the bottom, it's going to go up. When you see the wicks to the top, like up here and up here, that means it's going to drop. So you can see we have this massive A pattern, price drops. And we have this V pattern, price drops, wicks to the bottom. So I think one thing with me that I really just been able to do very easily is look at the market and right off the bat, I can be like, okay, like we're in an uptrend. I'm automatically going to take longs. Like sells are not even in the picture right now. And I think that's one thing that will help a lot of you out is when you see the market, you want to be able to say right off the bat, okay, like I'm buying. I am not selling in these markets. And if I do take a buy and price does reverse, like, okay, I'll go long. So when I was looking at the market right here, I was looking at it right here at these candles. I saw that price had bottomed out. We had this low right here. Then we had this higher high. There really wasn't a higher high because it didn't break this high yet. But I saw that price, this low right here, failed to break this low. And I said, okay, well, we have this fair value gap right here. Maybe price is going to hit that and then drop. But it did one, two times, and it didn't drop. So one thing that you guys want to see when you are trading these fair value gaps is you want to see price hit it and drop. Like I would have expected. Oops, didn't mean to do that. I would have expected price to have hit this fair value gap right here and drop to the downside. But notice how like the body of this candle did get lower than these wicks right here, which is kind of telling us like it wants to drop. But usually when I see price hit a fair value gap, I want it to move away very quickly. Yes, sometimes it will come back for a second run like this, but usually on the third time, it will either break one way or the other. So you can see first hit, dropped, second hit, dropped, third hit, failed to drop. This low didn't go lower than here. We're getting bullish candles, strong bullish candles like right here, and it's pushing up. So if you were to have gone in this trade, let's say you shorted right here and you had your stops right above the first candle that made the fair value gaps, this doji right here, you had your stops right above the high of it, you would have got stopped out on this run up right here on this candle. But then you could have been like, okay, well, I don't think shorts are in the playbook anymore. Let's go long. And you have to react quick because this next candle dives into this inversion fair value gap. So this is a regular fair value gap, but since it fails, now it becomes an inversion fair value gap. So when we hit it, we'd want to ideally sell off it. But now our bias has changed. We want to see price hit this inversion fair value gap and push up. So as I was looking at it right now, I was like, okay, like this is perfect. I'm going to mark up this inversion fair value gap. Ideally, if I was to take this trade, I'd want to see price retrade into it and then push up. And I was just aiming for this previous high right here. I was like, I'd have my stops right down here below this candle's low. And then I would have my take profit just at this high right here. Yeah, you could go for this high. Yeah, you could go for this high. But I'm more in the state of mind lately where I'm not trying to get the biggest fucking bag. Like, I just want to prove to myself that I can be a accurate, consistent trader. And sometimes to consistently hit your take profit, to consistently take profits, you need to just go for like a decent bag, a 1-to-1 risk reward ratio sometimes. Like, guys, I'm not gonna lie, my trades lately have been like 1.15s, where my take profit is it's like basically the same size as my stop loss, just a little bit bigger, maybe 2 to 1s. But before, when I was trying to trade the Fibonacci's again, I was like, oh my God, these risk reward ratios are crazy. We're getting like 5 to 1s, 10 to 1s. I was like, that's dope. But at the end of the day, I'm more focused on the fair value guys because they're a better liquidity entry model versus the Fibonacci's, at least with these market conditions that we've been seeing. And dude, the fair value, I guess they just do not fail. If you guys can do this 3-step process, you'll kill it with fair value gaps. The first thing is to look at the trend. You want to identify right off the bat, are we in an uptrend or downtrend? Secondly, you want to look for market structure. You guys, you can see these are higher highs, higher lows. Then we have this higher high and we have this higher low. This candle, these 2 candles are the higher low. It doesn't have to be perfectly mapped out like this higher high and higher low, how it does that staircase. This is still a higher high and a higher low because we're looking at price where it once went. So price is rejecting, looks to the bottom, it's going to go up. It's rejecting this level so hard. It's like, dude, I'm not staying here anymore. I have to freaking bounce. Hits it 2 times, ding, ding, doof. Look at this massive run of 1, 2, 3, 4, 5, 6, 7 green candles in a row. Just pushing. There he goes. Your second high is taken out. Then your third high is taken out. If you really wanted to go for a bag, after I see this high, this high, and this high, we have our next high up here. But you also need to remember that you can use previous support as your take profit or a desired exit level. So you could have used this low right here as your exit if you wanted. It aligns perfectly with this high right here. If you really wanted to go for a big bag, you could go up here or previous highs. But at the end of the day, guys, I don't think that you should focus on catching the biggest trades. I think you should focus on consistency. Consistently only taking trades when a fucking fair value gap is there. If there is no fair value gap or inversion fair value gap, you are not taking a trade. Do you have the discipline and the willpower to hold yourself accountable and say, do you know what? I'm not doing this. I'm not clicking the button. Because every time you click that button, you are putting risk on the line. You're putting your hard-earned money on the line. And that's where you need to stop thinking out of this emotional mindset and start thinking in a logical mindset. And if you guys don't know, there's 2 sides of the brain. There's one that acts in emotion, and then there's another part of your brain that acts in logic. You need to start using the logical side of your brain. Like, hey, is this really my setup? Take a second. Just sit there for a second. You don't have to rush it. You shouldn't feel anxiety. You guys shouldn't feel any of these high-strung emotions when you are trading. You should be very calm, very at ease. Just, okay, let's see if this does what I want it to do. If it doesn't, cool. I'm not using a crazy lot size. I'll probably lose like 1 to 2% of my account, but that's fine. I can handle that. And if it does hit my take profit, awesome. I'm gonna be able to respect myself and like myself more when I follow my plan and I stick to it. Stop treating trading like you're a freaking machine gunner on Call of Duty where you're entering 100 trades in a session. All you guys need is to sit there and be patient. If you can find that one setup, you're good. And when you do catch this one setup, walk away. Go enjoy your day. Go for a walk. Hit the gym. That's something that I do. After I'm trading, I always go for a long walk. I try and get my 10,000 steps in as soon as I can in the morning. Speed up my metabolism. I feel amazing. My dopamine levels are high. So just take this lesson into consideration, guys. There's a lot of value in game that I just gave you guys. So talk to you guys soon. Bye.
Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.